So good day, my name is Valdi Boyson. I'm an investment specialist at Peregrine Capital, and I look after the Western and Eastern Cape. Today, we're going to run through a couple of client testimonials and ask them why do they partner with us and what did they experience with our funds. Today, I've got Francois Le Clus here today. Francois has been an advisor for more than 7 years now. He's at Bovest Wealth, where they do holistic financial planning. Bit of history on Francois. He was a professional cricketer. He's a golf nut. He's done a couple of Ironmans. He loves functional training. He's a father, and he's also a mentor for young students in his business. And today he's actually going to tell us why he uses us and what he's experienced. Interesting thing. Now I have to ask you something, Francois. So what is your investment philosophy?
My investment philosophy? Well, basically whatever clients need is. So it's not a one-size-fits-all approach. It's a very tailor-made approach. So depending on the client, we'll base their assets according to such.
It's an interesting thing, and we actually want to move into a conversation in terms of how we started having a conversation. So how you first heard about Peregrine Capital is actually a very long story. I can actually elaborate on this into deep detail, but how did you get to know Peregrine?
Well, basically through yourself.
Yes, unfortunately, Francois and I know each other very long now. We went to school together and we bumped into each other because both of us emigrated down to the Western Cape and found ourselves in the situation like, oh, you're quite familiar. And then we saw ourselves in social circles. And as Francois does, we played golf together. And that's where the conversation actually started between the both of us. Francois, how did the golf go that day?
Well, as always, pretty poorly.
Are you reflecting to my golf or yours? I was the one that played poorly.
No, but I think on that, Valdi, I think it was still sort of a hard sell for you because previously I didn't know anything about hedge funds. It was sort of still quite new in the industry for financial advisors to start using. So even with myself, I had a few doubts when it came to hedge funds just because of the fact that you don't know, you're not educated enough on them. So it still felt a little bit murky, until you explained to me how hedge funds actually work.
Okay. So I think that's something that we need to start moving in towards because first, yes, obviously it's a hard sell talking about something that is, let's say, unfamiliar and also villainized in the market as a whole. So if we can work around with this. So your first experience with Peregrine was you were interested in the pure hedge fund. And how was your experience there? How did you approach the pure hedge fund and how did you, let's say, utilize that for your clients?
Yeah, I think that's a great question. When it came to the pure hedge fund, I always start with funds that are a little bit more conservative than aggressive when plugging them into clients' portfolios. So I would give a little allocation just to see how the funds perform and perform within my clients' portfolios. And I think that was the biggest thing for me is the stability that pure hedge brings into portfolios, especially for clients that are a little bit more on the cautious side of investing. That really brought, it's a different game than to other long only funds.
Okay, so in terms of your experience with the pure hedge over the last 3 years, what has it brought to your clients? Because obviously you start off at a small level and you're like, okay, cool, it's 2% allocation, maybe even 5%. Let's wing it a bit.
Yeah.
And what did it bring towards their portfolios?
I think the biggest thing is stability. And that's what the portfolio promises in the fund fact sheets is a lot of stability and capital protection. And that's exactly what I wanted. I want something that had a lot of stability and provided a little bit more returns than a cautious or a conservative fund.
Okay. So yes, in terms of how we started working with that, the thing that I found with you was it's that classic example of does the hedge fund do what it says on the label?
Yeah.
And did you find that to be true?
Yeah, 100%. So, I mean, if you look at the performance over the past 3 years of the PH fund, it's done extremely well and it's brought in that stability. And that's exactly what you want when you build portfolios for clients. You want the portfolio to do what it says it does. So it can't be a conservative portfolio or a more cautious portfolio, and it's got the volatility of an aggressive portfolio, because that's what people think hedge funds are. They think it's sort of all in, very volatile, and that's not what, Peregrine does for clients.
Yeah, so look, that was my conversation with you, and then unfortunately you had to go sit down with clients and explain the value here. How did that go off? when the first time you approached the client, look, you've got a book where a lot of clients are retired people and living annuities. So obviously they are a bit averse to change. How did you find that conversation with them?
To be honest, it was quite easy because previously some of the funds that we plugged into their portfolios didn't perform the way that I wanted them to perform. So we still had a little bit more volatility. We didn't get consistent returns out of the portfolios. And with plugging in the peer hedge fund, I started seeing a lot more stability within those portfolios and just more consistent returns. Yes, the fees was a little bit of a chat, but at the end of the day, it comes down to what is your need? Do you want, if you're going to cut something, do you want a kitchen knife or do you want a Swiss Army knife? You know, that's the same thing for me with hedge funds. They have a lot more capabilities than a long only fund. So at the end of the day, you're going to pay a little bit of a premium when it comes to, you know, having funds that can do different things than a long only fund. And that was quite an easy chat then, because I want my clients to be protected during downward movements within the market. And that's what Peregrine can do. That's the abilities that you guys have got. So yes, you know, financial advice always says remain invested, and that's always the most solid, best advice to give your clients. But if there are tools to help you protect your clients' portfolios, especially with downward movements, why not plug that in? Why not use that?
So, Francois, we've discussed the benefits of the funds and how you actually started using it. But in terms of your end clients, do you have any end clients with, let's say, within a living annuity that's been, let's say, exposed to drawing an income that is too high in their portfolios? And have you used the, let's say, pure hedge or high growth fund to actually minimize that risk?
Yeah, 100%, Valdu. I had a client that withdrew quite a lot each month, very close to double-digit numbers. And the problem that you're faced with then as an advisor is you need to take more risk because a money market fund isn't going to get there, right? And, you know, fixed income funds usually don't get there. So what I had to do was I had to bring in the pure hedge fund, which I know will give a lot more stability and hopefully provide those double-digit returns, or has got a better chance of getting those double-digit returns and just sustaining an income for a longer period of time. So in essence, what I had to do was I had to build a bigger income block that'll be able to provide a little bit more stability, try and get those double-digit returns, and then as well have the long-term equity side. So when the capital in the income bucket eventually starts eroding, we can start taking profits off the equity side. And I have to be honest, that brought a lot more stability within the client's portfolio, and it gave me, how can I say, just a better benchmark on what I wanted to achieve for my clients.
Francois, you've mentioned a couple of benefits here. Drawdown protection, the fact that the funds have got a, let's say, beneficial return profile. In terms of your client book with clients with living annuities that draw incomes, what have you experienced that the funds offer for your clients in terms of sequencing risk? The fact that if they experience high volatility within their portfolios, that it can be detrimental.
Yeah, 100%. At the end of the day, if you look at the drawdown rates, and especially with volatility in markets, if a client, you know, in his first 1 or 2 years, if there's a drawdown in the market of about 5 to 10%, your failure rate goes up substantially. So what you want to do is you want to get the client on a good foot, on a strong foot, right from the start. So with plugging in funds that provide a lot of capital stability and a lot of unit stability, because that's what we spoke about with a sequencing risk. At the end of the day, it's units that you end off selling. And once those unit prices go down, you have to sell more for the income. So with your funds, you get a lot more unit stability. So you've got a better outcome at the end of the day.
And then in terms of your wider range philosophy, something that you also mentioned to me was the funds add a nice form of diversification for you. What have you seen there? Is it something that tracks the market? Is it, let's say, a solution that adds in something different for your clients? Like it's like that coriander and food kind of vibe. Some would like it, some wouldn't. What have you seen there?
I think especially in the South African market, you only have so many shares that you can buy. You know, most fund managers, you know, a lot of them are highly correlated with each other. So it doesn't help that you put two fund managers that are highly correlated with each other into one portfolio, because you're not diversifying risk. So with using Peregrine and your hedge funds, at the end of the day, you're getting something that's way different, because you've got an open mandate, open architecture with the assets that you can use. I don't have to worry about the funds tracking other funds. And especially with downward movements, as you can see, I'm very conservative. I don't like downward movements for my clients. Especially with that, I know you guys can take certain positions that can protect my clients on the short term. Even if you take sort of like the tariff wars that we just saw. Peregrine was basically level during those 2 weeks where, you know, your high equity funds were down 12%. Yes, they came back strongly a few weeks later, but that was the biggest thing. You have a lot of clients then phoning you, telling you what's going on with my portfolio now. And it's quite a relief to be able to tell them, listen, your portfolio has actually gone sideways. And that brings a lot of relief to clients. And at the end of the day, it gives me a lot more trust in your funds, because I know you're doing what you're supposed to do.
I think moving on, and I think this is more of a future discussion. So if you could summarize Peregrine in a few words, what would you actually say?
That's a very good question. I would probably say consistent, professional, and knowledgeable. And I think that's very important for me to have when I see or when I use fund managers. I like seeing that, especially when it comes to transparency as well. I mean, your funds are FSCA approved, which is very, very important, because we're not allowed to invest in funds that aren't FSCA approved. You've got independent auditors. You're very transparent with your reporting, and that's very, very important to have, especially if people don't understand the funds at the start. At least you know that this is highly regulated.
And I think that actually moves into something that the both of us experienced when we started working together, where you had to go through numerous courses. You needed to do the accreditation to actually make use of hedge funds, to do the 1.26, so that you are a specialist advisor in terms of using these things. I think sometimes what people find themselves in is the things doesn't do what they do on the label. You buy a can of Coke and then it tastes like Fanta, and you need an expert to actually explain that to you. And I think that's what you went through. So in terms of the legalization, you actually tick the boxes. And if we can make this a bit more colloquial, if you could summarize hedge funds as golf clubs, what would you say?
As golf clubs? Goodness. I would say Titleist, a premium brand. Performance is always good. That's an interesting question. I've never had something like that, but I would probably say Titleist.
Francois, thank you so much for taking the time out and for actually chatting to me about the funds and the experience that you've had and that your clients have had. You should have a great day. Is there anything else that you'd like to close off with?
Nothing from my side. Thanks for having me.
Awesome, man. Thank you.